Yeah.
So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. And people had a real chance. And then more and more issuance came and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which
Sure.
the people would get out after day 5 and then day 3 and then day 2 and then hour 5 and then hour 2 and then hour 1 and then 30 seconds after launch. So they've got faster and faster and faster and faster and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013.
Right. The crypto space is in turmoil, and at the heart of the chaos is the meme coin phenomenon. What began as a gold mine for early investors quickly spiraled into a circus. The first wave of meme coins, with modest market caps, surged to astronomical valuations, some even reaching $1 billion in record time. But soon, the floodgates opened. New coins launched almost daily, and institutional players began muscling in. The result? A market flooded with endless tokens and a rise in pump-and-dump scams. Crypto, especially meme coins, has turned into a playground for quick money schemes, where coins are bought and sold within hours, leaving genuine investors fighting for the crumbs. With so many new, untested tokens emerging, finding real investment opportunities has become increasingly difficult. The market has transformed into a labyrinth of uncertainty. Yet, this chaos might be just what the market needs for a reset. Meme coins, like cockroaches, are tough to kill. Dogecoin, for instance, has been around since 2013 and is still going strong. Raoul recently sat down with Barron to discuss why crypto's market could remain in this volatile state until 2026, as the current environment is just too chaotic to stabilize.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The issue being is that everybody's getting destroyed by this.
Yeah.
So if we go back to meme coins 9 months ago, you could make some money. They would go from a low market cap and then maybe would they go to $1 billion. And people had a real chance. And then more and more issuance came and more kind of insiders were part of it. And it just became this endless slew of new issuance, of which the people would get out after day 5 and then day 3 and then day 2 and then hour 5 and then hour 2 and then hour 1 and then 30 seconds after launch. So they've got faster and faster and faster and faster and more of them, that what we've done is erode all the opportunity out of the whole thing. And maybe that's the good thing. Maybe we've actually finally reached the bottom of this. And some memes will survive, because memes survive all of humanity. So Doge has lasted since 2013.
Right.
So some stuff will survive, but I think what we've done is hyperscaled this cycle, destroyed all of the excess gains that were possible, and that's hopefully the end of a lot of this. And we can then have a cleaner market. I think the difficult thing is most of these people are not us. So these are younger people with no chance of buying a property, who are seeing nothing but sort of a bleak financial future for themselves. So it's become this kind of financial nihilism, or to put it in a more positive term, it's a more speculative economy, because there are opportunities there and they need the opportunities to leverage. So they will always keep looking for the 50x, even though however often we tell them, listen, there's no such thing as consistent 50x returns. Really, if you're owning Bitcoin, Ethereum, Solana, Sui, whatever, you'll do fine. But that's not good enough for them. To have another 5 or 10x from there is not good enough for them. So they are looking for something. But I think you're right. The sense is that they will stop looking under this particular pile. Yes, they might find memes, whether it's Pepe or whether it's Doge or whatever, that survives and does well. But I'm not entirely convinced that meme coins will be the great attraction any longer. So how we create network value is either by number of active users, or it's also the total value transacted on a particular chain. That combination explains the value of these networks. So Bitcoin has big size transactions and a lot of users, which is why it's the most valuable. ETH has smaller size but lots of users, and it all flows from that. So real world assets outside of stable coins tend to be larger single transactions. If you're going to take a slice of a bond, or credit or something like that, it tends to be you stick in $100 million because you're a financial institution, and you don't do any more than that. So it's a high value, but only one or a few nodes in the network are using it. So yes, they're good, but they're not everything. So they add value. Gaming, on the other hand, much smaller values, gigantic volume size. So there is a balance between all of this. Now, over time, we will see the entire financial system go onto blockchain rails anyway. So it's not just the tokenization of real world assets, more so the hyper efficiency of putting equities, all bonds, everything on chain as an instant settlement system, proof of ownership, custody. You get rid of so many middlemen. So that's coming, and those markets are trillions upon trillions of dollars. So yeah, it is important. Gaming's important from another perspective, because that's one of the large communities of Web 2, social media being one, gaming being another, music being another, sports being another, that will eventually migrate across to this world. And all of those come with like 1 billion users plus. I mean, a big game can have 1 billion users. A big pop star has 1 billion fans. A big sports team has 1 billion fans. So these are very big things.
So if you're looking at RWAs just in general, especially around the stance of Solana and Avalanche, are you picking one of those to be maybe one of the market leaders?
No, I mean, I know John Woo from Avalanche well. John's come out of the traditional finance space, the hedge fund space, like myself. They're very well positioned in real world assets. They've been working on this for a long time. But we've already seen Solana do some. ETH will obviously do a lot because it's kind of the proven one here. We know that Sui has been working with Franklin Templeton. So I think it'll get spread across. I actually think the real world asset majority will be in the EVM system, just because you don't get fired for it. You're not taking a risk. It's like having Microsoft go into any bank, any asset management firm. It's all Microsoft and not Apple. And the reason being, that's the easy decision to make. So Avalanche, I think, will continue to do this. They've got the other side of it as well, because they've got gaming as well. So they had the off the grid game, which is huge, which I think is very important. So my view is Ethereum have overbuilt block space for current demand. So we've had layer 2s, we've cheapened the layer 1, so it's not accruing so much. Now, let's go to a forward for a world where 3 billion people are using blockchain and EVM's capturing a large share, right? It's now scaling massively because of layer 2s. It's then generating enough income on the layer 1 that you're generating revenues across. We're just not there yet. So we can argue all day about the technicalities of what Vitalik and the Ethereum Foundation are doing. The reality is they're building something that's going to be massively scalable in due course, and differently so than some of the others like Solana. So it feels that ETH is struggling, it's non-performant, it's not great. My guess is by the time the financial system steps in and starts building, and they start using layer 2s to build, and we start accruing value in the layer 1s, using these reduced gas fees but much higher volumes because they're coming through from the layer 2s, I think it'll all work out fine.
Raoul Pal commented that the current Bitcoin market has fostered a sense of financial apathy among younger investors. This has led to a more speculative economy, where investors are chasing big returns without fully considering the risk. He highlighted that network value is driven by active users, with the overall value being transferred across the blockchain. Pal pointed out that Bitcoin's high value stems from its massive transaction volume and strong US-based presence, while Ethereum has fewer transactions but a larger user base. Pal believes that the financial system will eventually transition to blockchain, ushering in hyper-efficiency and rapid settlement. He also anticipates that gaming communities will play a major role in driving mass adoption of blockchain technology. Despite the challenges Ethereum faces, Pal sees it as developing a scalable platform for the future. Let's dive back into the interview and check out more clips to gain further insights from Raoul Pal AI.
AI agents is a little bit maybe contrarian. How would you position that if you look at it on ETH? Would you still say a little less opportunity or a lot opportunity in the way of Ethereum?
So in the short term, what has been launched is basically testing of ideas and really ChatGPT wrappers plus rewrapped Telegram bots. Not that interesting. But obviously, Brian Armstrong was out on the tape again talking about this today. is
Yeah.
agents are going to use crypto payment rails. You need to pay an agent. If you think of an agent like somebody on Fiverr you go to make a deck for you or whatever it is, right? You have to pay them for their time. And including their time is their profit margin for their light and rent and living and stuff like that. With agents, you're going to pay for the compute and you're going to pay for the electricity.
Yeah.
And then maybe a profit margin if it's a private agent. So that really can only get done in crypto rails, because if you look at the speed of how ChatGPT does these things or any of these AIs, it's instantaneously. They'll get that, we'll see it coming out soon where we will be using 10, 20, 30 different agents to do a simple task like booking an airline ticket, right? That actually has a lot of stops and booking your Uber to the airport, all of that stuff. So there'll be payments for all of this. I think EVM will do fine for payments on this stuff. On a layer 2 or something, because it needs to be performant, it needs to be fast, cheap. So yes, look, the longer term, this is a very, very, very big deal. There's only 8 billion humans, there's infinite AIs. And infinite AIs using infinite blockchain wallets equals, infinite market cap of crypto over time.
What would you suggest if you had Elon's ear right now? What would you say? Hey, let's do a variety of blockchains for different, scenarios. How would you play it?
Probably a variety of blockchains, just because it's net good for the United States. You don't want to be a maximalist at government level because it's too important. But certainly, things that need to be truthy can get truthier very quickly. Economic data is one, right? There's always the argument, and has been for as long as I've been in markets, economic data is manipulated. Well, once you put it on chain, it can't be. It's provably so. So we can do it with that. We can do it with spending. We can do it with budgets. All of this can go on blockchain. Now, let's see how brave they actually get versus what they say. But I think economic data might be. But there again, Trump might say, that I actually just want to massage the data myself. So people say they want truth, but it's not always clear that they do. Yes, I think it's a big deal for this cycle, because when I speak to institutions, both from the investment side or those that want to build on blockchain rails, this clarity is desperately needed. Desperately needed. Now, they kind of are moving forwards because they know it will be pretty liberal now going forwards in how we can use this technology. But it's still not easy enough for corporations to do this with ease.
Raoul discussed the potential of AI agents in the cryptocurrency market, noting that they will require crypto payment rails for speed and cost efficiency. He believes Ethereum's Layer 2 solutions will suffice for payments, and the rise of AI agents will significantly increase transactions, necessitating a scalable and efficient payment system. He emphasized that regulatory clarity for institutional investors in Bitcoin is critical and suggested that blockchain technology could enhance transparency and trust in the banking system by making economic data verifiable. Powell warned that the current market cycle could last until 2026, with Bitcoin's downside risk being lower, potentially dropping 50% or less. He believes the inclusion of ETFs and Bitcoin in 401 plans could reduce negative risk. Additionally, Powell highlighted the importance of opening capital markets and the recycling of money to attract fresh investment. However, he pointed out that traditional investors lack sufficient funds, and non-traditional sources might have to step in for additional financing. The current cycle is fueled by the debt refinance cycle, driven by the aging population and global debt. Powell believes this cycle may evolve but expects the core drivers to remain constant. He predicts that institutional involvement in Bitcoin and blockchain technologies will continue expanding, especially as regulatory certainty becomes clearer. The rise of AI agents could further influence the cryptocurrency market, driving changes in payment systems and market dynamic. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.